Welcome to Trading Nation. I'm Brian Sullivan. We're pleased to be joined by Tom Lee of Fundstrat Global Advisors. Tom, listen, you take your lumps sometimes, but you've been right this year. You got a target of 23.25. It's probably unlikely we hit that, but I mean, we could have a push in the last week or so of trading. Still, within about 2 to 2.5% of that numbers. Obviously, Dow 20,000 is going to be hit at some point. So congrats on the good call. What do you foresee for the near future?
Well, I think it's appropriate that investors have gotten bullish because, we've had, improving economic conditions. I think inflation expectations are improving. I think a chance for real deregulation happening for big business. And so I think it's appropriate for people to be more constructive. So, I think it makes sense that equities really are going to be one of the places to be next year.
Yeah, I mean, are you as bullish as you were this year? What would temper any optimism?
Well, I think there are things to keep your eye on for next year. One is that the yield curve has really flattened, and that's usually not a good sign. Some other things are, I think expectations for the tax cuts boosting earnings are too optimistic. And I think the same is true for infrastructure. So I think there's sources of concern next year as well.
But those things do not worry you enough to change a bullish view on the market.
Well, we'll have our full 2017 outlook in the first week of January. But Brian, it doesn't change what I would say is like sort of the broader narrative, which is, we're 8 years into a multiple, maybe even a 15, 16-year bull market. So, we're probably only in the mid-cycle of that bull market.
Yeah, and you mentioned yield curves, and there's sort of a simplistic view that, hey, yields are up, therefore the financials are going to benefit, and they have. I mean, many of them are up 20 and 30% in the past month, but it's not just higher yields. You've got to look at the spread and that curve flattening out, which you said is not a good thing. Do you think there's a little too much optimism around some of the financials?
Well, the banks and financials specifically, because they've underperformed for so long, I mean, really, if you compare them to where you were 10 years ago, you've lost a lot of money relative to the S&P. I think you can afford to be overly optimistic on financials in the next year.
You can.
Because you have so many tailwinds building. Okay,
fair enough. Is there one group that you are, I know you don't want to give away too much ahead of your the full release of this, but is there one group that you think maybe we're not focusing enough on right now?
Well, I'd say that in one of the groups that I think is a lot more dangerous than people realize, and it's something, it's a group we downgraded December 2015, is healthcare. I think it's still going to be tough to own it in 2017 because you've got a group that people tend to think pricing is a lot more safe than it is. I think there's pricing risk. I think there's enormous risk from Washington. And we've seen this happen to other groups that once groups go out of favor, they can derate and become a lot cheaper than you realize. And after leading for 5 years, there's potential for healthcare to lag for a number of years.
Healthcare may lag. He's made good calls this year, and we're awaiting the full release of that outlook for next year. And Tom, we hope when you do, we're going to see you here on Trading Nation or CNBC or both to give us more details. Thank you, Tom Lee.
Yeah, thanks, Brian. Take care.
Take care. All right. Thank you, folks, for watching Trading Nation. I'm Brian Sullivan. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.